Travis, the markets are anticipating rate cuts in September, and we've seen Treasury rates fall along with mortgage rates.
Yep.
At the time that we have filmed this, the 30-year mortgage is sitting right at about 6.5%, the lowest since May of 2023. The housing market has other obstacles, but falling rates are definitely going to help thaw out the housing issues that we've been seeing.
Yeah, can you believe we're talking about 6.5% is a low rate compared to like recent memory? Just a few years ago.
Yeah, we're below 2 or below 3. I mean.
Yeah, So obviously that's a start, Steve. Those who bought a house over the past few years at higher interest rates, they're going to have the opportunity to refinance here as rates creep down. Refinances are actually up around 59% from last year. But there's still, the number of them, it's still very low levels of people who are refinancing, because the reality is most Americans won't refinance. Nearly 90% of all mortgages right now have a rate below 6%. So they're going to be reluctant to sell their homes or refinance, obviously, at these rates.
You're absolutely right. But if you're in the market to buy right now, slightly lower rates mean you can afford slightly more expensive home. Now, Redfin estimates lower rates mean about a $30,000 increase in the home that you can buy, and your purchasing power, in a median home price.
Right.
What is that right now? Around
close to $500,000, about 500,000 or something.
Yeah, so 30,000 isn't a lot of money.
No.
But however, house prices being so high today, it's going to take a larger significant drop in these mortgage rates to really get this housing market going, isn't it?
It is, and mortgage rates could fall further here, Steve. First you've got mortgage rates could follow Treasury rates down as people anticipate rate cuts. Second, and people don't talk about this as much, is the spread between the 10-year Treasury and the 30-year mortgage rate could tighten. Currently, mortgage rates are about 2.5% higher than the 10-year Treasury, and that's higher than the historical level of around 1.7%. So that spread's a little higher due to banks. Banks have been retreating from the mortgage business, so there's less competition on rates. But if spreads tighten to those historical averages, the 30-year mortgage could fall to that 5.6, 5.7% level. It's obviously not the best we've ever seen, but relative to where we are now, it's definitely better and could go, further on thawing out the housing market. But
absolutely, because at 7 is where it was at, right, or above. It was north of 7.
Yeah, people will measure relative to 7, maybe instead of relative to 3, and you could start to see some transactions happening in the market. So.
There's no question. Travis, it's been great. I look forward to it next week.
Look forward to it as well.